All right. Um, Good day. This is EA channel, and in today's video, I'm going to show you how I use old lows, fair value gaps, inversion fair value gaps to analyze the stock market I'm interested in, and let's see how it actually moved around this area. Now, if you look at my chart here, you're going to see that it is Applied Digital Corporation. So that's the name of the stock I'm really interested in, and I saw some movements that really I was interested in, and how I bought it, where I left, and then what made me to buy it, and what made me to leave the stock as at when I bought it. Alright, as you can see, this is a 3-month time frame, and I'm drawing our attention to this fair value gap around here. So I'd anticipated that price will enter into that fair value gap. So I drew it out at first. This is a 3-month time frame, so it took a long time for this to actually pan out. So at the first time it entered the fair value gap, I wasn't interested at first, because one of the things I want to be looking for around 3 months fair value gap is stop hunt. And if I have not seen stop hunt around there, I really am not interested at it first. So I want to see some measure of stop hunt very deep, and this is it here. I think I prefer this kind of price action. This stop hunt that I just marked here was what I was looking for. So these are actually I use fair value gap. I want to see a measure of stop hunt. Stop hunt are what will actually drive the market around areas of fair value gap. So around those areas that I'm interested in the market, I want to see measures of stop hunt. So I'll just label this one stop hunt. Is on the 3-month time frame. Mind you, I've talked about fair value gaps. So having it there is like what I want to see before I will rather want to take a trade. So that's my stop hunt. So for me to have bought this stock, I had to stay for like 9 months waiting for what my confirmations are, so that it will help me take the trade to buy the stock, so to say. So I use this concept to filter out what I want to do and filter out setup. So 3 months fair value gap and stop hunt, it is shown there already. So we'll go to monthly time frame to still check. So I want to show you what I was actually looking for. So that's the stop hunt inside the larger fair value gap. Okay, let me show us the fair value gap on the 3 months, so that we can appreciate what I'm trying to show us here. So this was the fair value gap, and I couldn't do so much with this because the first time it actually came here around this area, I couldn't do so much with it. So I waited for an actual stop hunt to happen, and it did here. And we could see that after this stop hunt happened, price went higher before coming down again and then blowing up higher again. I really was interested after this stop hunt, and I will show you things that I consider on the lower time frame that helped me to this trade, that helped me bought this stock, so to say. And then now I'll go back to 3-month time frame to actually mute this out actually. Just only. So on the 1 month time frame, we can actually see the stop point here. This is the stop point area, and we can see actually the price. So now going to the weekly time frame, because there's not so much I can see here. Now let's go to the weekly time frame. Now on the weekly time frame, now this is a weekly time frame. This is the weekly time frame. Okay, let me show my levels. Those things I will show. Okay. Now you're going to see the stop point on the weekly time frame. Now this is the stop point on the weekly time frame. So after that stop point, what can we see? After the stop point, our next checklist that I normally give to us is seeing an inversion fair value gap. And that's the inversion fair value gap. Now, although this particular stock uses inversion fair value gap twice, but for the first time, I would have utilized it. Now, let me limit the scope of the inversion fair value gap here. This is the scope of the inversion that I wanted to show us for the first time. So we could see that at this point, this was May. Okay, this is a weekly time frame, and then after price had entered into this low, it began to reject higher up, and then eventually it closed beyond this fair value gap that was supposed to send price lower. It closed beyond it. When you see this kind of fair value gap, they're supposed to send price lower, but when price go above it, close vigorously above it like this, it will now become a support area for price to begin to drive higher. So, and also I want to draw our attention to something else, and I've been saying this earlier, that you want to look for something like this. After an inversion fair value gap has been formed, you want to check if there is an actual fair value gap, just like the one I'm trying to show us here. So overlapping ideas like this are what I want to look for in the marketplace and see how I can trade it. So we could see that after price had formed an inversion fair value gap with this purple rectangle that I used to show it, there was actually a fair value gap. So I love it to see that, okay, this inversion fair value gap has been created. Inversion fair value gap tells me that price is changing direction. That is what inversion fair value gap tells me. It tells me that what price is changing direction. So seeing this fair value gap here is like a confirmation for me that, okay, after price has changed direction, this little fair value gap that was just formed, just to make it a little bit bolder, this fair value gap that was just formed, can we see it? We can see that actually price traded into it again. Price traded into the fair value gap again before changing direction upward. So on this day, I set my position around $3.91. So I bought this stock around $3.91. So, and this is stock. I necessarily do not need to. I just needed price to come around that price area, and then I bought it. And then we could see that it is from that moment price began to what? Rise higher, rise higher, rise higher. So if you had bought this stock around June 2024, you could have been in profit for a very long time, and it's a whole lot anyway. So you will ask me, how do I escape this old down movement after I bought the stock here? There are price signatures that are here that's also already showing me that okay, I should actually leave the market after price has gotten to that area. Now this part of the price signature, this is an actual void ICT teaches. I need to mention him. He's the one that is the author of all of these things in the marketplace. I never knew it until he mentioned it. So this is it. This is the void. So after buying the stock from here, price began to move higher. And then when it got to around let's say around $6, I took my profit. Now imagine I bought shares worth of maybe $15 around there. Imagine what it should have given me after some weeks. So in this kind of void, you want to be taking your profit around there and then wait to see if the stock is willing to go above it. We'll see that in fact this stock was not willing to go above it. It actually retraced lower and then still find support around this inversion. So just for the sake of this class, this is how you can go in and then begin to analyze even stock market. You can see that after the stop point here, price dug in into the old low, and there was an opposing fair value gap which price went above, close beyond it. Of course, price retraced into the fair value gap and then traded into this void. Is an actual void. Let me give us, it is an actual void. And when you see that in the marketplace, you want to be taking if you have bought lower, just like as I was showing here, you want to begin to plan to exit your position around those areas. You don't want to keep your positions because you might not like what may happen after them. So this is a nice setup for anyone that would like to use it for his or her trading. So you can see that price took out old lows, and if I'm going to show you this on the 3-month time frame, there was a fair value gap around there. So I like to see stop points in fair value gaps. Once that happens, the price is really ready to take off. And after seeing stop points, you want to check, is there an opposing fair value gap just like this one? And you want to make sure that price close higher above those fair value gap. Once that has happened, look for fair value gap around this range, the newly formed range. Look for a fair value gap. If you see fair value gap overlapping with the inversion fair value gap, it is so sure price will retrace into it and then begin to trade higher. I've tested this, I've seen this all over and over and over again, and you can see that price entered into it. And so in this case, it's just like an old low versus a void. This is kind of my own definition of this setup: old low versus void. When you see those things, you want to sit down with it, monitor it. It takes you time to monitor it, to check it out. Do I really want to buy it? And then once you see that price has entered into your fair value gap, just as it is here, you can actually buy it, and then you see price traveling higher. So these are things that I usually use to analyze the markets, they read real meanings to me, and I use them, so to say. So there's so much value I'm giving us here. So much value. So much value. Now let's go to lower time frame, like the daily, to see how one would have seen these things. So on the daily time frame, what can you see here? Can you see? Look at how the inversion fair value gap and the fair value gap overlap with each other. Can you see? So one thing I'm drawing your attention to is inversion fair value gap. Once that happens, once a fair value gap has been validated, especially the one we are seeing here, it's a sign and signal that price is changing direction. The price is changing direction, and so we can see the price enter into this fair value gap. If you have bought it at $3 or less or more than that, let me see, if you have bought this stock at $3.9, that's a nice profit. Or you bought it at $4, it's a nice profit to be in. So what you want to do with this information is go to your chart, look for old lows, important ones, especially the ones that you see in around fair value gaps. You want to look for those things and then check the behavior of price around there. Once you see an old low, you want to check, is there a fair value gap very close to it here, like this one that was there earlier. This fair value gap is the one I use a purple rectangle to denote. Was there an old low? Yes. Did price enter into it? Sure. Did it trade past the fair value gap? Yes. Okay. So what do we do with that information? It tells us that price has changed direction. And we can see that there was this small little fair value gap created. Price retraces into it and then begin to travel higher. And this is an actual void. It works similarly like a fair value gap. So at this point, if I took my trade here and then I offload my position here, an old low versus an actual void. This is a kind of nice trade setup that if you understand and you can wait patiently for the market to do that, you can actually see a whole lot of opportunities and trade ideas. So the responsibility is on you to go into the marketplace and then look for these things. There are really, really interesting things in the marketplace. So hope you have gotten nice value from this. See you in my next tutorial. See you in my next post. Do well to like, to share it, and to subscribe to my channel. See you next time.